Okay, almost ready. Today's topic, identifying current pattern and direction in today's markets. One thing that fractal geometry scalability have in common with technical analysis, I guess fractal geometry would be a study of technical analysis, is that they both put more weight on the higher time frame patterns. Those higher time frame scales, long-term trend, tend to be more influential than the shorter term trends for the most part. You get in slow times of the year like right now, or you get in a counter trending market where, and we'll show you examples of counter trending markets where a market's balanced. That's when those are those times when you can focus on the shorter term. Believe it or not, there are times when the short term will have more influence than the long term trends, and you need to know that. Okay, looks like we're ready to go. Hopefully everyone can see the screen. As always, we need to remind you, trading futures and forex is a risky endeavor and not suitable for all investors. And we certainly mean that. It can be a mesmerizing business. It really can for individuals, perhaps personalities or addictive personalities, individuals. It's not for everyone, and we'll leave it at that, right? Okay, and as always, the techniques demonstrated here are proprietary and should not be retaught or retransmitted in any way. I hope you guys can gain from this. I want you to see if you can apply it in your own trading. I wouldn't even mind if you tell your trading buddies about it, have them come in too, but we're trying to stay away from other educators doing webinars using our techniques a month down the road. My name is Jay Norris. I'm a 20-year trading floor veteran of the Chicago Board of Trade. I'm the founder of Trading University, where we provide educational content to individuals and private sector companies. I also spend a lot of time teaching in live markets. I've written a couple of books on trading, which were published by McGraw-Hill and which serve as the textbooks for our courses at Trading University. What makes these books unique is that they both include trading plans, which allow you to go back and backtest that information provided. Transparency, obviously very important for everybody. I'm a big method guy, and if I had to summarize the method we teach, it would be this. We understand the fractal nature of markets and focus on those markets with low non-systemic risk and look to trade at those times when the day-to-day news flow is aligned with the primary or secondary patterns. Those primary and secondary patterns primarily being longer-term patterns. When I say markets with low non-systemic risk, specifically currencies, stock indices, and a lot of your ETFs, by the way, also happen to be have lower non-systemic risk, certainly than individual commodities and individual stocks. So that's what I mean by low non-systemic risk. We can't get away from systemic risk in the marketplace. Systemic risk is actually a good thing. We love it. That's what makes markets move. But that non-systemic risk, such as you have with an individual commodity like corn. If a corn report comes out, it's going to have an oversized effect. Certainly, a stock too would have non-systemic risk, such as a company such as like Bear Stearns or Lehman, where poof, they just implode, they're gone, right? The Australian dollar, I don't think is going to disappear anytime soon. Many of your ETFs or your stock indices the same way. The S&P 500, it's a stock index of 500 stocks, some of the best stocks in the world. So we don't necessarily have to worry about that being down 50% in one day, right? If that happens, then we have bigger problems, right? That means an asteroid is about to hit the Earth or something. So we try to stay away from non-systemic risk. And you could do it, too, in today's marketplace. I think that bears restating, and you can see I put some emphasis there. We try to trade at those times when the day-to-day news flow is aligned with the primary or secondary patterns. The term pattern may be new for some of you guys. You may be more familiar with the term trend. Think of a pattern as a long-term trend made up of smaller trends. So the pattern, essentially, it's going to be a long-term trend that is going to encompass those smaller patterns and those smaller trends. So the pattern itself includes all those smaller trends in it, Well, what's nice about a pattern is it's simple to measure whether a pattern is bullish or bearish, and that's what we spend a lot of time ensuring that you know how to do also at Trading University. So think of the pattern as that long-term, all-encompassing trend that's pretty easy to measure whether it's bullish or bearish. Now, also at the beginning, we say we understand the fractal nature of markets. That means before we go forward, we're going to have to define the term fractal for you guys. A fractal, a pattern or shape whose parts echo the whole. The simple underlying pattern, which when replicated creates a larger, more complex pattern, i.e. chaos theory, the study of which is called fractal geometry. You know, these are big words. In the end, it's going to be just a simple AB pattern or ABC pattern, whatever, that continues to get replicated. And not just in the marketplace, we see it, but we see it in everywhere. Essentially every breathing system, every living system is composed of fractals. If you take a flower, that's a fractal. And similar to technical analysis, where the higher time frames tend to be more stable than the lower time frames, if you look at a flower, the stem tends to be a little bit more stable than the petal, right? The petal can hold up to adverse conditions a little bit better than those new little buds that are coming out of there, the florets, right? So the just as in markets, just as in nature, the higher time frames tend to hold up. They tend to be a little bit more stable than those lower time frames. So it's easy enough to look at a market really like a plant. You know, if you see a plant, you can tell a plant's healthy, right? If you look at that plant, you can tell it's healthy. If it's flowering or it's budding, it's fruits coming off it, you can see the nice color to it. You don't have to know that you have pretty good weather conditions, right, when the plant's healthy. On the other hand, when you see that plant wilting, you know that that plant needs water, or that plant's not getting enough minerals or something, or it's too cold out there or something, right? Same thing with the market. If a market's sagging, then it's in a poor environment, right? If a market's roaring, then it's in a pretty good environment, right? So same thing. Right, Mike, or the branches of the tree, too. Same story. Branches of the tree is a great example. I was thinking of that, of the stability. Obviously, you know, when you're a kid and you're going to build a tree fort, you want to build it on those lower branches, right? Because those lower branches, they're a little bit steadier. So in trading, you want to trade when you get against higher time frame support, because they're going to provide more stability for you also. So that's what we mean that markets typify fractal geometry. And here's a picture of a sunflower, which is fractal in nature. You can see the equal angular spiral pattern to it. As long as the environment for this flower itself is stable, each new floret grows into a petal. And again, markets are very similar in that their environment will definitely determine whether they're going to be growing or contracting. And the flower, you know, similar. If the flower's not getting sun, you're going to see the beautiful green color of these florets as they're coming off there, as they're each being born, very healthy looking. If you're not getting sun, those flowers are going to start to get brown, right? Now the petals, they'll still look good. The stem itself will still be healthy. The petals will look okay, but you'll see the change right here on that very short term, on this brand new florets. That's where you see. The gardener's going to look to make sure that plant's healthy. He wants to see that nice green color to it. So that's why how he knows the environment. It's the same thing with the market. Same story with the market. So fractal geometry, it should be included in the study of technical analysis. I'm not sure what is technical analysis in fractal geometry or fractal geometry in technical analysis. It probably doesn't matter for right now. But my point being that fractal geometry, fractal analysis for you guys should be an extension of technical analysis for you. Many of the principles, the guiding principles of technical analysis is going to be the same thing for us going forward. Zebra says he feels like a bumblebee. I love that picture of that sunflower, by the way. I don't know. It just makes me happy, and that whole design to it's really cool. But a fractal, to go over it again, is a pattern or shape whose parts echo the whole. The simple underlying pattern, which when replicated creates a larger, more complex pattern. Hopefully you see I'm hitting that pattern. That's my world. To me, trading is all pattern, and we'll get, when we get to the chart shortly, I'll show you that too, and we'll go over all these markets and we'll see those patterns and how they're apropos to us as traders, and how at certain times of the year they're going to be a little bit more influential for us. So I meant that when I said pattern. From a trader, it's extremely important to realize that. And you will find generally that the more patterns align prior to a trade, the higher your winning trade expectancy will be. And it is that trade expectancy, be it positive or negative, that really is going to determine your success as a trader. It's going to determine whether you trade live or not, really, because we all have, subconsciously, we all have a pretty good idea how our method is. And we could talk it up. We could talk to our trading buddy about it, but unless we really believe that it is what we say it is, we're probably going to stay in that demo account, right? And that's a smart thing, too, because believe me, there's not too many of us that can come right out of the gate and come up with a winning trading methodology, right? Mike, exactly. The cauliflower is a perfect example. Mike's talking about a cauliflower being fractal in nature. Anything that lives and grows is fractal in nature. Our hand itself is a fractal because you have 5 appendages on that arm. The arm has 3 joints to it, and each finger has 3 appendages. Very, very similar. The 5 and 3 waves of Elliott. Same thing with all of us, and it's just how it is too. And there's so many lessons we can learn in biology that apply to trading, physics too, as far as the principles of positive and negative interference. If the Aussie and the Euro are going in the same direction, you're going to get a bigger move. If, on the other hand, if the Aussie's going down and the Euro's going up like it had been the last couple of days, you're not going to get a big move because that's negative interference. When they're moving together, that's when you get the bigger moves. So, the same principles that apply in so many things in life are going to apply in trading. And probably the most important one of them is just common sense. Just common sense and patience. Hey, something happened there. There it is. I want to highlight that in the definition of the fractal here, when the underlying pattern, which when replicated creates a larger, more complex pattern. I want to home in on that. The lower the time frame, the more complex the pattern, i.e. the less perfect the pattern. A very simple concept, just like I think it was Mike said with the tree. The lower branches, the bigger branches are going to provide, they're going to be steadier, right? They're going to provide more support, those heavier branches, where the further up the tree you get, the smaller branches, they're going to be, blowing every which way in the wind. If you look at the higher branch on the tree, well, you can't tell whether that branch is going to go east, west, north, or south. That next little branch or that next leaf that comes out of it, you don't know which direction it's going to go in. When you look at the base of the tree or you look at one of the higher branches of the tree, you have a pretty good idea which way that tree is going. It's going up, right? It's going up overall. So the lower the time frame in markets, the more complex the pattern. Same thing in life. Same thing in nature. Whoops, we went a little too far there. Time to go to the charts now so we can actually all start to make sense of what we're saying, what I'm saying. And here we go. Let me switch the camera. This is the current Australian dollar chart. This is a 15-minute chart. You could consider these the branches of the trees, these trade zones here. You can see your micro zone is down. Now, I really want to peel out and go to the higher time frames, but I think what's going on in the shorter time frames is apropos too. You can see our micro pattern is down. You had a rally, you got into the micro zone. The micro zone held. Look at that, how beautiful that was. You couldn't get beyond that, and now you're seeing the market trail off. That's a micro time frame. If you trade those, you want to be aware of that. Generally, you probably get better sell signals against them. This is, a super micro right here. That's my super micro. That's session only. Here's intraday, that micro zone. So the micro zone is generally going to provide stronger resistance than that super micro zone. But these are all intraday. The reason I'm focusing on the intraday right now is we're in counter trending markets. We're in slow markets right now also. So if I pop out to the higher time frames, you'll probably be more familiar with that. And you can see our primary's up, our secondary pattern's up. In fact, our day-to-day is up also. And you recognize these designations for the patterns. They're based on Dow theory. Dow theory is the primary pattern, secondary pattern, day-to-day pattern, essentially the same time frames for them also when you measure. Our day-to-day happens to be from a week to a month. My micro happens to be from a day to 5 days. My super micro, if I go back to that lower time frame, the super micro happens to be 1 session to 5 sessions. Okay, so the whole idea behind this, we go to a 4-hour and you can see what's going on there. You can see both the primaries up, secondaries up, day-to-days up. Ideally, you want to trade with the majority of patterns. However, there are going to be times where, like August, when everything's slowed down and you happen to get in a counter-trending market. This happens to be a counter-trending market. I want to get it so you can see everything. Because essentially, if you look, the primary pattern support is so far away, it's really not, it's just not relevant right now. But if you're trading the very short term, you can see you take these 3 patterns, the day-to-day, the micro, the super micro, the majority of them are down. However, when we peel out to a 4-hour and we could take into consideration the secondary patterns up, now we could say, well, this market is a balanced market now. Hopefully, yeah, there we go. Okay, there's a 60-minute secondary up, day-to-day up, but micro down, super micro down. So essentially you're balanced. And when you're balanced, another word for that is a counter-trending market. So in a counter-trending market, these shorter term time frames are going to be more influential. So here's where we're at now. We're balanced on the short term. However, the long term trends are still higher in the euro. So we're breaking it down where each pattern is a different slice of time, which we can definitively measure. It's either bullish or bearish. Let's go Aussie CAD. So we're just going to go down the line in alphabetical order here for the most part, and we'll look at the different trends in these markets and going to Aussie CAD. This is interesting because this was the leader. The Aussie CAD was the strongest Aussie pair. We could see the primaries up, secondaries up, day-to-day patterns down now. So that day-to-day pattern shifted. That's interesting. We're going to see how much of a leader that is if the other markets follow suit and sell off too. We'll have to see. But currently, the primaries up, the secondaries up. This would still be considered a counter trend move. However, on those lower time frames, if I go to an hourly chart, your day-to-day is down. So if your day-to-day is down, it looks to me like your micros and your super micros are down also. So on the shorter time frames, the majority of patterns are down. So that would mean we wouldn't want to work this to the short side, at least until we get into secondary pattern support, especially this time of the year. Now, the danger of trading those short-term time frames is there's a reason why the secondary and the primary patterns are up, because essentially your business cycle is supporting that move. So the danger in working and going counter trend on these lower time frames is you have some news hits this market, and it's in line with the cycle, the current business cycle. It's probably going to be bullish news. But currently, if you're a day trader, short is a trend trade. If you're a position trader, long is still a trend trade. So we're determining what way we're going to trade that market and what time frame we're going to trade that market based on how the patterns are set up like that. And it shouldn't be new, that concept new to anyone who's studied technical analysis. Essentially, those higher time frames are definitely more influential, but at the same time, there are times of the year or the month, the day even, where those lower time frames are going to have a little bit more influence, a little more pull in it, and that's going to be when you're in a counter trending market. So long-term trend's still up, but you could see the day traders are probably making a little hay there in the Aussie CAD, and once that, essentially here, if I can show you on a 4-hour, that should do it. Basically, once this last impulse move here, see that last impulse move up, once that retraces beyond that green line for the most part, once you get a couple closes below that, then that's a shift of that. Is that a day-to-day pattern? It's certainly a micro pattern. Yeah, once you get that shift, once that last impulse move retraces by more than X%, then that pattern is shifted. So you need to know that. Aussie CAD, not as bullish as it was. Here's the Euro US dollar coming up next. The Euro, we could see on the daily chart, very definitely the higher time frames are down, primaries down, secondary down. On the other hand, look at your balanced up now. Both your day-to-day and your micro are up. So the euro is all about balanced right here. Day-to-day pattern up, micro pattern still up. You need to, here's your micro. If you close below that purple line is your day-to-day pattern, and that green line below the purple line happens to be that micro pattern also. So you can see you have pretty good support there at 22.5 in the euro. It would probably take some pretty big news to reverse this day-to-day pattern. So you have that, you have data. I should really have this right here. The day-to-day pattern is right there, and that micro pattern is actually right there. So the euro currently in a balanced market. Perfect timing. No surprise, you're in a balanced market in the dog days of August. Next market, and stop if you have any questions about any particular market. And the beauty of looking at the markets from a technical aspect like this, of course, from a fractal aspect, is that we understand that the news, just like, you know, you can look at a flower and you could tell it's healthy by the color of those new florets coming off it. You could tell whether you're in a healthy economic environment for the market you're in, because it's going up. It's either going up or down, right? So that's a pretty cool thing too. And you know, here's euro yen. We can go to a daily, and no doubt about it, the primary's down, the secondary's down. On the other hand, look at that day-to-day pattern is up. So you know, perfect time of the year. Whoop, let me go out to a 4 hour. That's cool. Look at that, how this pattern held, then that pattern held, then it looks like this little pattern held there too. Looks like a 50% retracement right there. On the other hand, this is a pretty small branch to be leaning on, right, for that pattern. It did hold the 50%. You had a little bounce there interday. On the other hand, I want to see a double bottom on that 50. It's such a small branch like that. You can count on the higher time frame branches, like right there. Here you see you got in the zone, you got in that day-to-day zone, and you had a nice double bottom. You got below it here, the purple line, but then you had a nice bottom right on the purple line. That's a little bit heavier. It's a higher time frame scale. It's a day-to-day scale, so pretty good support on the day-to-day scale. On the other hand, this is a micro, and maybe even a super micro scale, so that's kind of a small branch to be counting on. But you see, you had a pretty good move off of there, though. So here, this is euro yen. It's another balance. You're balanced up pretty good now. You can see that the patterns are holding. This pattern held, that pattern held. But it's drying up, though. You can see the ranges are getting smaller there, too. It's just that time of the year. Let me consult my list here and see which market is next. Euro yen, euro Aussie. Here's another one where clearly the primary is down and secondary pattern is down. Euro Aussie, and when we go to the 4 hour, boy, you couldn't get anywhere with that. Your day-to-day is still, well, your day-to-day is flat. I don't like things being flat. It's either bullish or bearish. This is definitely a bearish chart, and I say that because, look, you can't, these retracements are still shallow even down on these levels. Let me see if you're able to. Now look at that. You can't even get two closes above, look, that last impulse move down at the end of I. Still a very bearish market. Look at that. You can't get above that zone. That's my sell zone. Generally, if a market's strong, it'll close. You get two closes above that zone, it's going to reverse that last impulse move down. Here you can't. You can't get beyond the sell zone. Here they tricked you. You know, they ran some shorts out of there, and boom, look at, they reversed it right back. So Euro Aussie back on the downside. Very weak market. Day-to-day pattern still bearish. So, you know, you focus on that higher time frames, and they're just going to rule. they're going to rule the roost. You can't even get a day-to-day reversal. You can't even get beyond that level right there. That I don't know, it's 2/3. You can't even get back 2/3 of that move. So essentially, this pattern is still bearish. We're looking at from here to here. Euro Aussie not looking good, right? Euro pound we'll take a gander at. And be aware, yeah, you definitely want to trade with the higher time frame patterns. On the other hand, there's going to be times where when a market balances up like that it's going to go counter trend on you, and those lower time frame patterns are going to start to rule the roost. There is a time when you have to heed what's happening on those lower branches, where every little bit of wind can come in there and affect the market, and that is when it's in a counter trend stance, and you happen to have a slow time of the year too. Now, regardless of what time of the year it is, the markets always behave well. They always respect those pattern lines. They always stick to the patterns. But what happens in slow time of year, the correlations get thrown off. And when the correlations get thrown off, we saw that the last couple of days where the euro was weak and the euro was strong and the Aussie was weak. That's a time when you're definitely in the counter trending markets. You're not going to get big moves. You always get the bigger moves when everything's correlated and moving in the same direction. So euro pound, this is a sick market. The primary trend's down, the secondary pattern's down. We go to the 4-hour. Well, we'll have to see. It looks like you're coming up on. It's going to have to decide what it's going to do. Yeah, look at that. You have a nice support right on that line there. So your day-to-day pattern is still bullish now. You're holding that line. So that may be one. Well, I was going to say this may be one to watch, but not really, because it's only one pattern. The primary and the secondary are still down. But you wouldn't want to be short yet. You'd rather get closed above that line a couple times, then have a rally to sell. So if you were to close below that line on the 4-hour a couple of times, then you get a next rally. You retrace this down move, or even better, you retrace the overall move. You'd look to sell a rally then. But it's got to close below that line. It's got to shift that pattern. So that day-to-day pattern is still bullish here because it held that line. So euro pound, it's not looking as bad as it might otherwise. So euro pound day-to-day is higher. So essentially you're balanced up and you're sitting right on support there. It's fascinating to see those pattern lines hold even in the other pairs, not necessarily is what we consider the 5 majors, but in the cross pairs like that. It's fascinating to see the geometrics are the same in mostly all the markets. And that will be the case in mature trends. They will show you very predictable retracements. A mature trend will retrace right between that 50 and that 625 or even 2/3. Whatever becomes characteristic for the market, whatever the previous retracement was, what was characteristic of it, you tend to see a repetition of that. And it's the same thing in the plant world too. It's the same thing anything that really grows. You can tell a lot by what fruit's going to come off the vine next by the previous fruit that came off the vine, right? And here's the pound itself. Kind of interesting. You're really balanced up, and nothing's changed since June. Primary's up, the secondary's down. At the time your day-to-day was flat. I'd have to say it still is. And that's just not a fun market unless you're a mean reversion trader. It's a word on mean reversion. A lot of professional traders still lean towards mean reversion. Bill Williams told me years ago. He said you can't follow a method that relies on linear equations, and you can't follow mean reverting method because the way the world is going, that you've got all these things that we've never experienced before. And he said this, he told me this like 8 years ago, and this is this is long before. Well, it was right around when global warming was hitting the headlines too, but this is 100 years before the zero interest rate policies that we're seeing now. This is long before the Keynesian, the degree of Keynesian influence we see now. So he was telling me this a long time ago that you have to have a method that's based on fractal geometry that's going to take advantage of big moves, not get you to, not take your money, not clean your, pick you upside down and shake your money out in big moves. You have to have a method that's going to take advantage of the big moves. This is a market that it's going to still work for those old school mean reversion traders. There's probably still a lot of them out there. Believe me, it's a hard thing to learn something new. It's a hard thing to admit that your previous experience isn't going to do you much good. You have to figure out a way to take something new and build that into your previous experience and then start to go in that direction. It's a hard thing to shift gears, but pound is probably a favorite of a lot of old school traders because it's still a pretty good mean reverting market. So if your method is counter trend in nature, the pound is probably the way to go because you can see it's really balanced up here. Look at it, it just stays in those sideways ranges too for the most part. Here sideways, tried to break out. It's mean reverting. Look, it tries to break out and it jumps right back up. And you can see the overall range it's in. See the weekly, look at that. I mean, that's just a trending market. So the pound, still a mean reverting market. Still an old school market. You're not going to make money as a trend trader on the pound, at least, at least not looking at the experience we've had in the past couple of years. So that's good for some traders. Pound yen. Well, you're getting some play here in the old pound yen. That day-to-day pattern is still down. Here, let me clear that line out. That was your previous. That held that line. So couldn't even get beyond the 50% of that. That was a secondary pattern line. Let me just remove that. Let me see where you may have let me see this extent of that retracement right there. No cigar. You only closed below it once. Closed on it once. Only once. So it's got to close below it twice. So this, I may have to revise that. But it looks like you have a short-term secondary pattern on. And just as, every pattern itself is going to have a long and short-term too because everything's fractal in nature. So here's one where this is a little confusing because my short-term secondary or my long-term day-to-day is still bullish because it held that level. It only closed below it once, needs to close below it twice. So basically a short-term pattern is bullish, but this intermediate-term secondary pattern is bearish. So this is essentially a balanced market also. But what's interesting to me is that you have a big double bottom here, and now you have a potential bottom here. So historically, it looks like peel out to weekly. Oh, yeah, and look at the weekly, too. Historically, you're at pretty cheap levels, right? $120 historic level. I don't think you'll find too many professionals that'll press a market below a big level like that. So yeah, look at that 120 critical level. We'll see what happens. It would really need to. Well, if it can, let me see where we're at on this little rally here. Pound yen kind of coming to life. I just don't see a lot of hope for. I prefer to trade asset class markets, meaning a market with a yield or with dividend. There you go. Look at it, stop right where we would expect it to stop. So you're still essentially in a counter-trending market. It's a little bit fascinating because you're at historic levels. It's cheap historically, but if there's no yield to it, there's no reason to invest in it. And I tell you what, going forward, the markets that traders invest in, that institutional investors prefer to accumulate, that sovereign funds need to accumulate because of a yield, those are the markets that you're going to want to be trading. I'm afraid this guy just has no yield to it. And you can see you're still in a bearish pattern overall. I mean, you're just going to basically adjust that trend line. Something like that. So not a lot to look at here. And you know what? The bottom line, let's keep it simple. The secondary pattern is down. The primary pattern is down. So until you could shift that secondary, there's just nothing to do. And that would take really a move all the way up here. You need to get beyond that level to shake off this move. So it really not a whole lot to look at here from my perspective. And it had a neat shape to it, but it just doesn't look like there's enough room to move here for me. You have to look at a market that investors see as favorable. The big individuals that allocate where institutional funds get deployed. And I could tell you from experience, they're probably not going to look at pound yen like they look at Aussie yen or Aussie dollar or Aussie CAD. Kiwi. Speaking of investment markets, little New Zealand is an investment grade market, asset class market, because it's got that big yield to it. Primary's up, secondary's up, the day-to-day was up. Let me see, it was 240 if that day-to-day where the day-to-day is. Yeah, I drew that. I drew that last time we were together. Let me just extend that out. So yeah, the day-to-day is a week to a month or so. That's going to be a reflection of your day-to-day news flow. Day-to-day news flow is still bullish. So we still bullish. This is a 4-hour chart. So there you go. The Kiwi on the 4-hour, this is a tough market. So the day-to-day is still higher. Primary up, secondary up, day-to-day up. And you closed a couple of, the secondary is, in fact, shifted bullish too. So now your secondary pattern, we noted that before. Your secondary pattern shifted up at the beginning of August. So really buying a dip in this market, it's probably what I would have said. This is an interesting market to buy a dip in. That's why we have those pattern lines there. If we can get a dip into that zone, that may be a zone that we'll take a look at, target. So, all other things being considered too. If Israel goes into Iran, you can see a temporary shock in the market, and these day-to-day levels will go out the door, and you're looking at secondary patterns then. And if you're looking at a secondary pattern, then here's our zone's going to be down here now. That would be the bottom of our zone, and you never know if Israel starts lobbing. If they go in there, which it looks like they may before the U.S. election, then that's our support, right? Because you have a global event like that can overrun those day-to-day lines in a hurry. So then you could stretch that. So yeah, you have to be aware of a lot of things in this business, right? But let me go dollar CAD. Dollar CAD, we pretty clear on that one. We said once it closes below par, that's it. It's done, right? We don't want anything to do with it. We were looking for a potential buy set up above par. Never gave it. Well, you had to change the direction, but it just never could. It never could retrace enough of that last impulse move down to really make it interesting. Look at that. It couldn't even get beyond to the half. So ideally, you want to see it get up there, dip, and then you get it. It just didn't do it. It couldn't hold par. And look at that. I said if it closes below par, then you're looking at 98. So I'll stick to that analysis. We're looking at 98 on this market. We're going to revisit it at the end of the quarter probably. But we'll take a look at it at the end of the month. But likely the end of the quarter, we'll review that. Coming up, looking forward, you have a pretty nasty bearish seasonal for the U.S. dollar. Once if you get halfway through September, the second half of September, October, really to the end of the year, it's a pretty nasty seasonal for the dollar. So I don't like being long. I don't like having long dollar exposure in here. Well, these are tough markets right now because currently I like it short that Aussie, but that means I'm long the dollar, right? But I guess my point is, when you're in a counter trending environment, you're just looking for a lot littler bites, a lot smaller bites. So you want to have those OCOs on there, right? You want to have a limit just below and that stop just above because you're not looking for a big push in the current environment we're in. So dollar CAD, I don't see much hope for this thing. I think it's going to test. It's going to get just above 98 even, and we're going to see what's there. The Chief, I haven't looked at the Chief in a while. Well, you guys are quiet, no questions, huh? Oh, there's the chief. Look at that. It got in our day-to-day zone. Well, this is a tough market, right? The primary's up, the secondary's up. You go to a 4-hour, and look at that. It got right into our zone there. Oh, I should have been following it, and it gave us a nice rounded bottom there. And then look at this retracement right here. Oh yeah, look at that, right? And then this is the pattern I'm interested in. This is the fourth pattern right there. So you have 4 patterns aligned. That's a buy. You want to be looking to be a buyer down there. Let me look at that on a 15-minute. Here, and then here today too. Boy, I'm sleeping then. But yeah, yesterday, you want to see that. You definitely want to see that that double bottom, and that's you have 3 other patterns bullish. So pulling out to the daily, well, 4-hour, you can see this is a market where you have everything aligned. Primary's up, secondary's up, day-to-day held. When that day-to-day held, you're looking there. That's a good area to buy. And then you could break it down on that 60-minute chart. And right here, you're looking to be a buyer also, right there. See that pattern? So nice. That 2/3 line held. So that's a bullish pattern. When it holds that level, it stays bullish. If it closes below it a couple of times, then it's going to be bearish. Here you can see it didn't. It closed below it once. Tricked you, right? It only closed below it once, and so the pattern held. Yeah, that chief is, Mike. Yeah, it definitely is. So the chief not looking bad. Now this is a market. As I said, I'll get a little bit nervous as I get into. You're probably okay until mid-September. So you probably have another month or so. But August is going to be a slow month. So there's the old adage: don't get caught short in a quiet market. This is a quiet market, and it's continuing to go to move higher. On the other hand, you get into September, and these dollar pairs aren't going to look as attractive because of that seasonal. But we'll see. You get no bigger move than when a seasonal fails. Everyone's trying to take advantage of the seasonal, and they have to reverse. So nothing's etched in stone, right? So that was the chief. Let's look at dollar yen, very popular pair lately. Boy, the Owanda, you don't want to fade that. You don't want to fade the crowd on Owanda. Owanda has that little thing on their blog where they tell you how all their traders are positioned, and boy, I think it got over 80% were bullish the dollar yen, and they were right too. So boy, they've got some smart traders there. Short term, mind you. I think we made a video of this. We showed a lot of you guys this yesterday. That red line is 764. It's Fibonacci 764. So we knew that about that 764 because the market had given us that same level here too. Here, I'll show you. But it's an interesting market. I think from if you're a fundamental trader, you really have to start looking at accumulating this market at these levels. There you can see 764 held here. Oh, I'm sorry, I've got the wrong numbers on here. Okay, what's going on? There you go, 764 held. If you take the 2011 high, the 2011 low, the 2012 high, 764 held on the penny right there. So that's where you're tipped off if that was a key number. And then it held again here. If you take this low to that high, 764 held right there. And now when you go down to that 240, you can see 764 held again right there. So that's fractal geometry at work. When you see those multiple patterns aligned, you have to eat them. And there's your 764 again. See 764 held. So when you see those multiple patterns aligning, you have to be aware of that. Boy, yen took a trip today, didn't it? Down, up. This is something. Really what we have to focus on in the yen is it's got to at least get beyond that purple line a couple times. Ideally, if you get a couple closes up here and then it retraces, then we'll be interested in it. So if it goes up, comes down, then we'll look to buy a dip. But for now, the primary pattern is still down, and arguably this secondary pattern too. So your primary's down, secondary's down. Interesting market though. I tell you what, investors are taking a long look at it, but there's no carry to it, and it's hard to trust the August move, right? Hard to trust an August move, and that's what it is so far. So time will tell if there's more to that dollar-yen move. Hey, let's look at the U.S. stock market, and we'll wrap it up right on time there. Is this a healthy-looking market or what? Primary up, secondary up, day-to-day up. You took out the trend line. Generally, when you get all the patterns aligned, you're either going to do one of two things. You're going to have a breakout or you're going to correct. And that's just how it is. And a lot of, I'm sure that the timing of, the business cycle, et cetera, has a little bit to do with that too. August is not traditionally a month for a breakout, so we'll have to see. But it's certainly a healthy market, and there's a lot of money on the sidelines wanting to buy the dip here. Mike is saying there's just pockets of liquidity in August. August is something. So we'll have to see. A lot of money would like to buy the dip to get in long here that didn't have the dip, didn't buy in June. Well, it didn't stay down there long, did it? So a ton of money on the sidelines. The big thing here is what's Israel going to do? There's serious talk now about they want to take out Iran's nuclear capability before the election. They're trying to do Romney a solid by taking care of that dirty business before you get a regime switch here, or whoever wins that election. But we'll have to see. And I mean, that's just speculation. We know to focus on the pattern. Obviously, the stock market's not worried about that too much. I guess that would be a bullish event, right? The market would see that as being very bullish if you could take out someone's nuclear capability in that part of the world, right? So we'll have to see. So yeah, to me, it's just all pattern, and it's all on those lower time frames too. Well, you have to. I should say you have to take your cue from the higher time frames, but at the same time, you have to know when to go to those lower time frames. And speaking of which, here's the Aussie dollar, and it's just hanging around. It's hung up on the bottom of that zone there, thinking you get a drop down sooner rather than later. We'll have to see, but you see the top of that zone held pretty good here. Let's get rid of that line, and then it'll give the Aussie room to drop down. So it's very important that you do understand the fractal nature of markets. I think we did a good job explaining that before, taking our time. And it's also very important that you understand that your knowledge of technical analysis and fundamental analysis also, that's sound. It's sound what you have. You just have to take that and build on it, with that basic premise that the long term is better for the most part. However, you have to recognize when you're in a counter-trending market, such as we are now in the Aussie here, you can see you're definitely in a counter-trending market, where the lower time frames are down, but the higher time frames are still higher. So that's a market where you're probably going to have to take your cue from these lower time frames, and you see how influential that super micro pattern was right there. Market couldn't get through it. So there comes a time when you need to focus on those lower time frames also, or just walk away. As a trader, you need to know what environment you're in, and that's going to play a part in how you're going to trade for sure. And if you want to know a lot more about what we're doing, come and see us at trading-u.com. I'm excited. September is when our next semester starts. If you go click on the calendar there, look at that. I'll be busy. Look at our calendar for September. That's 5 days a week we'll be going. And we'll still be doing our FX Street webinars in addition to that. So we teach our master's course in live markets in both the U.S. and Asian sessions. So we'll go AM and PM, and that's going to mean I'm a busy guy. So $199, you get everything up front. For $199, you get let me go the other way. You get the core concepts, advanced concepts, graduates, and the master's course. So we're throwing everything there at you, and that all starts in the second week of September. Yeah, we'll get going in that master's course. So, hey, thank you very much. Hopefully, what we're seeing, what we're showing you is starting to make sense for you. Well, gee, what about the degree? Who certifies the degree? Well, we're working on it. Serious question too, because is it accredited? No, it's not necessarily accredited yet. That takes some time, but that would certainly be something that we're looking at too. And it is an appropriate question because now there's the universities out there that are learning so much is online now too that legitimate or I should say certified universities are definitely looking at adding to their curriculums too. So that will be something that we'd like to see done also. But it's obviously a complicated process. Learning to trade doesn't necessarily have to be. However, you got to go at your own pace. Education is so important to you as traders. Experience is even more so. So you need to go at your own pace. Obviously you can learn, you can glimpse things in a live presentation like that. On the other hand, you need something that's on demand, and that's the beauty of what we do. And we definitely follow adult principles of learning, and that you guys are only going to learn if you want to learn. And it's very important that you grasp things quickly too. Otherwise, you're going to lose interest in it also. So that's the beauty of having the online campus, where you can definitely go at your own pace. You can, and that's important for you too. On demand is everything. It definitely is. We're there for you in live markets with the questions, but it's essential that you get that 16 hours of the instructional video and then the quizzes and then the office hours before you come to the master's course. I mean, it's over 80 hours of live market instruction, interactive too. But that's great, and you can have that up front if you want it. But to me, you want to get in there and you want to go over all those on-demand videos. It's the advanced concepts in the graduate course that you really got to get down before you come with your questions to the master's course. But yeah, no, markets are they're definitely it's a fascinating experience. So we definitely look forward to seeing you in September. That's for sure. And don't be shy if you want to come. Check out the courses or sign up for a demo account or come and see our live market exercises, which are free also. Yeah, it's all about education. There's no doubt about it. Forewarned is forearmed, right? And how do you get forearmed? Regardless of what you're going to do, it helps to have a little bit of education, and it helps that's affordable too. Hey, I'm taking next week off. I'll be in Breckenridge, Colorado. I thought about coming to you from there, but I'm just going to get away and not have to sweat it. So hey, thank you, GY. I definitely will enjoy that holiday, and we'll definitely be back with you closer to September. And I know I'll see some of you also in our live classes at the university in September also. I'm looking forward to getting going there again. I've been sleeping in too much. Zebra, you like the skiing? I like it. I'm not a big skier because I'm too old. There's a picture of me. You see all that gray hair. I'm afraid I'll fall down and break my leg or something, or worse, break my hand. Right? But I don't mind getting in a sled and going down the hill that way. I love Breckenridge in August though. It's just gorgeous. It's 70s in the daytime. You hike in the mountains and it's like 40s at night. See why he thought I'd dye my no. Now, what kind of fool would dye his hair gray? Colorado is awesome, Zebra. I love it out there. But I don't like the winters are too long. I don't like that mud season either. So we love to get out there. Generally, we're out there, try to spend most of August out there. But this year was a little funny. But we're definitely going to get out there for a week or two. Not even sure when we're coming back. We know when we're going. We don't know when we're coming back. So yeah, that's beautiful. I love the mountain air out there. It's a pretty drive too. It's funny. The older you get, you don't mind driving either. When when I was younger, I liked to fly everywhere. I love to drive now. Yeah, zebra golfing. There you go. Fishing too. Fishing to me is getting on getting on a pontoon boat. I can't think of it. Dillon Lake, I think Dillon Reservoir. They got the big trout in there. Now, out in Colorado, you think fishing, you're going to think you're fly fishing. No, I put me on the big pontoon with a cooler full of beer, and I just drop my line straight down, and they park me over the hole where the trout are, and you pull the trout out that way. Rather than putting on, that little vest and you tying flies and wading through that cold river. No. Put me on the pontoon with the cooler beer, park me over the fishing hole, send me that's fishing. Hey, I'm from Chicago. We used to throw like M80s. We throw like quarter sticks of dynamite in the cemetery pond and watch the fish float up, and that's how we fish when we were kids. So, I'm not sentimental about all the LL Bean look and all the fly fishing. Give me just a spin rod with a worm on it. Park me over the fishing hole. It's all good though. No, so I'll take the week off, and then we'll definitely take at least a week off, and we'll catch up with you guys next time. And hopefully, you're staying out of trouble in these markets because August is kind of a slow time, and hopefully you're learning something from the webinars here. All right. Thank you so much, and we'll catch up with everyone when we see you next time. Thank you, Annie, and we'll catch up with you next week then, or the week after. Okay, Alan. See you, everybody.